Hello, everyone. I'm Deb.
And I'm Per.
Welcome to Lockin' It In with Deb and Per. This is a program where you will get informed about all things related to real estate and the mortgage market. This is our third season now. Our first season, if you recall, was on Clay Radio, which of course changed to a Catholic format. And mortgages aren't exactly Catholic, nor is real estate. So we moved on to another studio, and now we are broadcasting from our own home studio. And we welcome you to a third season, and we're really excited about it.
Yeah, it's been about 2 years, hasn't it?
Season 2. It's been almost 2 years now. Yeah, we're still getting likes and views and everything, and we haven't been doing this. I know COVID's been kind of a downer. Not that real estate has been down. Certainly, inventory's been down, which has been a frustrating thing for my client buyers. All those multiple offer situations.
It was down before, though.
Inventory was already low, and when COVID hit, we had a sudden interest among buyers, new home buyers, which is something that I haven't seen before. So many people wanting to buy a new home, their first home, I should say.
The problem is there's so many buyers and there's so few sellers.
Right. The lack of inventory. And, I was looking at this report from the National Association of Realtors. Real estate in this area, Seattle, Tacoma, Bellevue area, has gone up about 18% during this time.
Just this year.
Yeah.
In fact, in some cases it's a lot more than that. In some cases it's a little bit less. But I had one appraisal that came back in October on a property that was at 240. Then the same property, an appraisal came back in early April at 370.
That's huge.
and all across the board, my appraisals have been high. That's an extreme example, but all across the board, my appraisals that my clients have come in way higher.
Yeah, we've had in real estate the multiple offer situation, as you might guess. However, people have been making offers on homes without seeing them at all. Sight unseen. And the pictures could be from 6 years ago. Yeah, that's really scary. The multiple offer situation out there is really, the amount of money it goes over the price to make a multiple offer, you almost have to bid on a house that's considerably less than what the client qualifies for.
Right. When COVID hit, they shut down the real estate market for about a month. Was it a month or was it a couple weeks?
Couple weeks to a month. It was somewhere in there.
But then as soon as they got their act together and they opened it up again, things just went wild. In terms of lending guidelines got tougher as soon as the COVID hit. But at this point, in the last couple months, they've been easing up. In fact, one of my lenders, my biggest lender, that never did manufactured homes, is doing them now as of about a couple weeks ago. They're also doing jumbo loans, which they had not been doing for years. They're also doing adjustable rate loans, which I won't participate in. But it's just an example of how things are really opening up at this point.
Yeah, single wides.
I have another lender that does single wides that just lowered their credit score standard from 620 to 540 credit score. So I've got a borrower with a 560s credit score that can go FHA with them.
Are these for a purchase or for a refinance?
Either.
Really?
But in this case, it's a purchase.
That seems a little scary. Going too low on the credit score.
The credit has to be good still. It's just and for example, they may have collections or something like that's bogging down their credit score. If there's a reason for it, then they can do it. But if they've got mortgage rates, if they've got late on
So
installment
collections are
loans.
okay, but the stuff that you can't pay consistently on time.
Yeah, you
rather
have to
than
have
stuff you don't pay at all.
you have to have 2
Okay.
years. 2 years good with that.
That makes sense. Honestly, you're not going to have a collection on a mortgage. But if you decide to pay those collections one day, it's probably because you have extra money.
Well, and the collections could be 6 or 7 years old,
Yeah.
too. And they're still affecting the credit score to a small degree.
Yeah, they'll be off there in probably another year or so.
Yeah.
Yeah.
But
Well,
things have really opened up, especially with the lowering of the credit scores and also the opening up of the programs to additional programs.
I know that now what I have predicted when COVID started and what I still think is going to happen now that we're opening up again, families have been reassessing their lives, their lifestyle, working at home, schooling at home. Everything's a hybrid now. They may need more space in their home to live and work so they can all live and work together in the same house. The needs change completely, and if you don't have to commute every day, you might change your mind where you live. And I think that even though home listings have been slow, inventory has been low, there's been a consistent stream of buyers. We didn't have a peak real estate season last year. We had one steady buying season. I think now, once things open up, that people are going to start moving. They'll either downsize, upsize, or move out of their
because
apartment.
they're tired of where they're living.
Yeah, it's not working for them.
Either they need a bigger house or they need a smaller house.
Yeah, because where you live isn't functional. You know, we've been spending the last year trying to make our homes functional in a way they weren't. And maybe you might decide it's better just to get a house that will suit your needs better. And I think this will happen. I think inventory will improve over time as families reassess their lives now that we're opening up again.
Some people will be tired of where they are, especially with the living conditions the way they are now, where everybody's working from home.
And a big deal here, there are a lot of young families renting apartments. And they would really prefer to rent a single-family home. That works much better when you're working from home, etc., when you have a family. And it's really difficult to rent these type of properties. Really, the cost of mortgaging one of these properties is actually about the same, maybe less. And it's guaranteed your payment's not going to go up unless you get an adjustable rate mortgage.
Which
I
don't know anyone that's
recommend.
trying to do those. I
think they got a bad name. I think people are going to be really hesitant to get those.
The only reason you'd ever want to use an adjustable rate loan is if you are definitely going to sell in the next year or two. In my opinion.
Yeah. If you know for sure you're going to sell, but then if you don't sell, you got to be able to refinance that thing really quick.
Right.
You know, another thing I think is going to affect the market in the near future is 5G. If you live in an area where you're the last one to get the cell tower upgrade, I think the values of those homes are going to kind of stagnate once the 5G hits the urban areas. It is actually 100 times faster than the current 4G. It is lightning fast. And once that starts rolling out, everybody's going to want it. No one's going to live in those places out in the boondocks where you can't even get cell reception. That's what the new 4G is going to be like. It's going to be like you're not getting reception in the boondocks compared to 5G. I think that home prices, they're going to stay somewhat stable. I don't see them going down. I think they're going to, increase in price is going to slow down a little bit. It has to. There's only so much the market can tolerate.
That's what I said about a year ago, but things have just escalated, especially this year.
Yeah. And I think that's a direct result of COVID. I know that a lot of buyers were motivated during COVID. And not always because, well, sure, they might have a place they've been renting forever and they might not be in a hurry, but I think when you're there all day, you just get this bug and you just, you find it's the time.
Plus, there are the other consequences of COVID, such as lumber has tripled in price. this year. Groceries are much more expensive than they were because of trucking costs and so on. Everything, we have inflation.
And in some ways it doesn't make sense because the oil supply has nothing to do with COVID. It's an essential industry. I'm a little, but I know there's issues maybe crossing borders, things like that.
Right.
If you have to
there are
truck over a border. If it's airmail, it's fine. But if you got to drive it in, there's probably a ton of delays. Kind of like that one Christmas Eve in England. You know, people trying to get home to France, all these truckers, they were stuck at the border. Oh, that was a nightmare. I am excited. I don't see the inventory staying as low as it is for much longer.
You think people are going to start selling more?
I think so. I think it'll take a few months to pick up.
They're going to want to downgrade or upgrade.
Yeah.
And that'll spark the sale.
Or if you're working from home, maybe you want to live in another place where you can walk to the park, take a break, and go out for lunch instead of... Yeah, because you don't live where you work. You have a different lifestyle altogether. I know my lifestyle is upstairs and I need a Rambler really desperately. And I'm looking forward to that one day. And one thing we want to know from all of you out there is, what are your questions today? I know a lot is going on, a lot's happened recently. And you might even have questions in general about real estate. What are some of your questions? Let us know in the comments below, and we'll talk about them on a future episode.
Thank you.
Thank you. Be sure to like, subscribe, and we'll see you again next week on Locking It In with Deb and Per.